liquidity ratio. The current ratio for 7-Eleven in the year of 2020 is 0.6273, while in 2021 is 0.8119. There are a slight of increase of 0.1846 in the year of 2021. While for the quick ratio, in the quick ratio for 7-Eleven in year of 2020 is 0.3072, while in the year of 2021 they are 0.3554. There are slight of increase of 0.048 in year of 2021.
The total of a company declared dividend issued for each ordinary share outstanding is known as dividend per share. In 2020, the amount of DPS is Rm0.016, while in 2021, the amount of DPS is slightly increased to Rm0.023. The price to earning ratio is the proportion of a company market price to its earning per share. It is calculated by dividing earning per share by market price. Based on the calculation, a reduction occurs from 52.3 times in 2020 to 38.2 times in 2021. This shows that the market is optimistic about the stock prospects.
For profitability ratio of 7-Eleven, in the net profit margin in 2020 there are 1.4320, and while in year of 2021 there are 2.1494. There is a slight increase in 2021, which is 0.7174. For return on equity in 2020 there are 21.9283, while in year of 2021 there are 32.3220. In 2021 there are increase of 10.3937 higher than 2020. For return on asset in 2020 there are 1,735.67, while in 2020 there are 2,600.39. It means in 2020 there are an increase as much as 864.72 more than year 2020.
Assalamualaikum, and my name is Nohidayatul Atira. So here I will explain about the leverage ratio. So this is the 7-Eleven Malaysia Holdings Berhad debt to equity historical data. The historical data of trend for 7-Eleven Malaysia Berhad debt to equity can be seen below. For operating data section, all numbers are indicated by the unit behind each term and all currency related amount are in USD. For other sections, all numbers are in millions except for per share data, ratio and percentage. All currency related amount are indicated in the company's associated stock exchange currency. So this is the 7-Eleven Malaysia Holdings Berhad annual data. The debt equity on December 2020 is 17 and 87. And for December 2021, the debt to equity is 14.41. So here we can see that the debt to equity on December 21 is less and decrease than December 2020. So next, this is the debt to equity ratio of 7-Eleven Malaysia Holdings Berhad. Based on the annual data on December 2020, the debt to equity ratio is 7.40. It changed negative 0.01 and changed negative 0.13%. And for December 2021, the debt to equity ratio is 7.12 and change negative 0.28 and change negative 3.74%. We can see that the total amount from December 2020 is kept lower to December 2021. So compared to debt to equity ratio in 2020 and 2021, so based on December 2021, it is lower than year 2020. So a lower debt to equity ratio less than 1 usually implies a more financially stable business. Creditors usually like a low ratio less than 1 debt to equity ratio because it is the indication of greater protection to their money. However, stay in low ratio may not be a good thing. It could be also shows that the company in that time is not taking advantage of the increased profits that financial leverage may bring.
Technical analysis is the study of market action or market behavior as it is related to price and share volume. It's seen that all brokers could handle their final decision more soundly with the aid of technical analysis. For all investors, the stock market price is the secret to success. They do so because every market stock demand and supply are based on technical analysis. Brokers are therefore forecast the price in the future at the specific moment by analysis the history of the stock market. There are certain advantages to technical analysis, those such as how quickly support and resistance level can be located, how it can help investors determine when to buy or sell, and how quickly pattern can be recognized. The importance of technical analysis. First, because it is a simple method of determining support and resistance level. Technical analysis is essential. This is due to the fact that by using a stock chart and technical analysis, all investors will be able to identify which level are the support and resistance. The cycle of market congestion when stock price moves over an extended period of time with a narrow range will be determined by their value. Broker can choose the great stock to invest in or avoid investing in when they are able to identify which support and resistance level are the best. When demand and supply are balanced, it indicates that prices are rising over the ceiling. The importance of technical analysis cannot be overstated because it enables all investors to reach the time point. The investor will be able to take demand and supply pattern into account in order to make user jump implemented or still have mastered timing the procedure. If investors are willing to take on some risks, technical analysis can also help them to get largest return on their investment. Additionally, if investors wish to buy stock, they need to be well versed on the current market trend. Investor frequency conduct stock chart and automatically become aware of both short and long-term pattern, which can aid them in making a better investment choice. In order to achieve big profit, the broker may also be informed of recent and historical stock movement as well as market volatility. Last but not least, the broker will have all the knowledge necessary to make the best selection without losing or risking their money with the aid of technical analysis. Charles H2, co-founder of Dow Jones and Company and writer, publisher and first editor of the Wall Street Journal, derived the town theory from Wall Street Journal editorials. The idea demonstrates how investors might utilize the stock market to gauge the state of the economy. The first idea to explain why the economy is evolving in a predictable way was this one. There are a few fundamental principles of the theory, which are the average discount evidence. Thou accept that the price of stock and index accurately reflect all information that is available on the market. Additionally, the market includes three key trends which are all present. It demonstrates how stock prices change over the long term. This is often several years. The correction of primary trend, which normally lasts a few weeks to a few months, is represented by the secondary trend. Minor trends are regular functions in stock movement that last 3 weeks or less, and are the movement of secondary trend. According to the Dow theory, there are three phases to major trend: an accumulation period, a public engagement phase, and a distribution phase. Because of same signal, the average must agree with each other. The volume must support the trend. For example, in an upward trend, the volume rises as the price do. Decline price and volume meet a downward trend. Last but not least, a substantial portion of the foundation of new trend following way is formed by the pattern that is thought to be infecting before if given a strong warning that it has risen. Trending professionals have access to a wide range of technical tools such as support and resistance level, market pattern, trend line, and moving average to help with a difficult task of identifying revision indicator.
A bar chart is a graph with rectangular bars. The graph usually compares different categories, although the graph can be plotted vertically or horizontally. The most usually type of bar graph is vertical. The horizontal x-axis represents the categories. The vertical y-axis represents a value for those categories. In the graph below, the value are percentage. A bar graph is useful for looking at a set of data and making comparison. Next, a line chart is a graphical representation of an asset's historical price action that connect a series of data points with a continuous line. This is the most basic type of chart used in finance, and it typically only depicts a security closing prices over time. A point and figure chart plots price movement for stocks, bonds, commodities, or futures without taking into consideration the passage of time. Technically, analysis still utilize concepts such as support and resistance, as well as other patterns when viewing point and figure charts. Next, Japanese candlesticks are a technical analysis tool that traders use to chart and analyze the price movement of securities. The concept of candlestick charting was developed by Monehisa Homma. Traders can use the candlestick to identify pattern of price and make decision based on the short-term direction of the prices. Japanese candlestick provide more detailed and accurate information about price movement as compared to bar chart. They provide a graphical representation of the supply and demand behind each time period price action. Last, on balance volume, OBV is a technical trading momentum indicator that uses volume flow to predict changes in stock price. Joseph Granville first developed the OBV metric in the 1963. So he believed that volume was the key force behind markets and designed OBV to project where major moves in the market would occur based on volume changes. That's all from me. Thank you.